Hello traders, and welcome to another video review. Today is Thursday, December 21st, 2023. Let's find out what's going on the economic calendar today. As you can see, I got only the most important and the medium important events for today. And during the London session, there is almost nothing to be reported. No significant events has been made overnight as well. We got this data around 12 p.m. from Turkey, and it's of course the interest rate decision. For now, the interest rate decision is at the level of 40%. The forecast is expected of 42.5%, so hike is being basically expected here. Now, the other situation is with the New York session. During the New York session, we got plenty of data releases, and some of them are very important. The first one is the US GDP. This data is scheduled for release at 2:30, and there is an interesting increase from 2.1 to 5.2% forecasted. The Philadelphia Fed Manufacturing Index is scheduled for release at the same time, 2:30, and then another improvement from -5.9 to -3 points is being expected. Philly Fed employment is scheduled for release at the same time as well. Then initial jobless claims is scheduled for release at the same time as well. And initial jobless claims are forecasted to hike from 202,000 to 214,000. In the meantime, we got core retail sales and retail sales data from Canada. And then we got at 5 o'clock ECB Lane speech and Fed balance sheet scheduled for release at 10:30. So as you can see, we got plenty of the very important data scheduled for release during the US session. So let's just find out what is then the situation on the US dollar and maybe the S&P 500 ahead of this interesting data releases: GDP, Philadelphia Fed Manufacturing Index, and initial jobless claims. US dollar is, as you can see, roughly unchanged on this chart, but the euro is hovering against the 50 periods moving average. So the overall the euro dollar pair is right now trading roughly around 1.0952, where the 50 periods moving average is. There is potential handle in progress, as I've been trying to point out this for the last few days. We got the cup already done here with the potential to double top pattern. Then the handle is still in progress, and the potential of course breakout to the upside is still on the table. The swing high is located at 1.1018, and if we get this handle done here very nicely, there is a potential for a breakout even higher. Intraday technical support on euro dollar is located at the level of 1.0888, and then there is one at 1.0827. The key support zone is still located between 1.0745 1.0770. So please notice that we need to break below this level and make the new low below 1.0723 in order to get this outlook more bearish. Momentum is still positive, not that strong, only 56 points, but for now the short-term momentum supports the bullish outlook, especially if the handle will be finally made. So that was the euro dollar. Let's find out what the other markets are doing. Let's just find out what the S&P 500 is doing. This is 4-hour chart of the S&P 500, and as you can see, S&P 500 keeps moving up, and it keeps moving up, but that's not the big news. The big news here is that if we switch to daily, you can clearly see that we are very, very close to the all-time high. Let me just point you out this all-time high level. This all-time high level is located at 4,870. So this is the level here, and it will act, of course, as the technical resistance. And the last movement to the upside has ended at 4,777. So only like 47 points away from the all-time high. Of course, when you look at the momentum situation. The market is extremely overbought at this level. Now it's coming off this level, and it tries to come off this level, and the key short-term technical support is the swing high from the July 27th, located at 4,612, and this will act as the technical support. Let's switch then from the bigger view towards the 4-hour chart back on, and this is what we got. We got the technical support here, just above the 4,602 points, where is the 100 periods moving average. We broke below 50 periods moving average. We're moving lower, as you can see, sharp drop in the momentum on the 4-hour chart. What do we have? What do we have here? We can make some kind of a, I guess, some kind of a channel. So let's do it. This parallel channel was often very helpful for traders. So if we do this, we can see that we are just hovering around this this channel, just above it. If we extend our channel to some reasonable levels, like for example this one, it's nothing wrong to do it this way. So we can even make it a little bit smaller and extend it even a little bit lower. There you go, higher. So there you go. So we are just touching the lower channel line. Nevertheless, the market is still trending inside of this channel, but in the lower half. Okay, so now what we are waiting for, maybe potential breakout lower below the level of, let's say, 4,700 towards, of course, the key technical support 4,612, and then we will see what the market wants to do with this situation. The red line is, of course, the all-time high. The green line is this key technical support. Very sharp decline, bearish engulfing pattern, no doubt about it. So please keep an eye on the current support. We might see some kind of a profit taking, some kind of a extension to the downside in order to complete this correction on the S&P 500. Does anything else react the same way? For example, does gold market react the same way? No, apparently not. On a 4-hour chart, our market is back above the trend line. Let me just make it a little bit more precise so I can use the magnet again. So if we get this trend line roughly here, so there you go, it's working like a charm. Now we are hovering around in a narrow zone. Let me just zoom in to show you this narrow zone, the recent narrow zone. So the zone is located just between let me grab the line, just between the levels of 2047, and as you can see, we are hovering a little bit higher. So the lower level is 2015, but if we get some kind of a line here, you can clearly see that this movement to the upside is made like this. So that's the internal line, support line, of course. So we are forming some sort of the triangle, so some sort of the bullish pennant pattern, and the market might be getting ready for another breakout higher. Nevertheless, it still doesn't look that positive or strong. Momentum is at the level of 56. It's still positive, but it's not very strong. It hovers around the level of 50-56. Maximum was 62, bouncing from the level of 50. So for now, it's looking good. Will we get this kind of a breakout to the upside? Let me just grab the arrow. Will we get this kind of a breakout to the upside? Maybe. It looks like the market is trying to do this, but whether it will be successful, the time will tell. And the last one we would like to take a look at, of course, is the market of the crude oil. Why? Because we broke below the key technical resistance. Let me just zoom in slightly here. So there you are. We broke above the 74 barrels, $74 per barrel of the crude oil. So that was the key technical resistance here. The local high was made at 75.36. So we got the new technical resistance, local technical resistance. Nevertheless, there is a clear bearish engulfing pattern at the top of the move. The market tested the technical support now, 43.83, 47.13. And now it's trying to resume the up move. The next target is located at 46.74 and 79. Next target is located at 76.74 and 79.58. That's it. There you go. So so far it's looking good. The momentum is strong. It hits the extremely overbought conditions, but it as you can see, moved lower straight on. Right now the RSI is above the level of 60. It's still trying to move higher. The price is trying to move higher. There's room to the upside. So maybe this recent technical resistance now become the technical support, and we might be seeing another situation when the correction is getting better. Last one was of course 10%. How big is the recent correction? Let's just check the price range. So from the lows of the hammer to the recent high, there is 11.30. So this movement is 1%, exactly 1% bigger than the last one, but there is no continuation to the upside just yet. All right, so that might be the beginning of the upside correction, because there is overbalance of price and time right now, at least the price, maybe time not, because it's way faster. So with any breakout above 75.36, so the recent swing high, we can extend this this correction to the upside, and then there is no doubt that we are moving higher, targeting these two levels I've mentioned, 76.74 and 79.58. Is this the beginning of the bigger rebound on the crude oil? Time will tell. We know that in the background there is still some sort of the downtrend from the highs of 95, and this is not the biggest correction in this overall downtrend. The biggest correction is still 11.47. so this movement to the upside is roughly almost the same as the last biggest correction. Any breakout higher, as I said, and daily close above 70, this is 75.36, will be considered bullish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.